Welcome to the new episode of FICOMPA's Jam Session podcast. I'm Bruno Robino and I will be your host today. Today, I'm joined by Yannis Tsakiris. Mr. Tsakiris is Deputy Minister for Development and Investment in Greece, and we are here today to discuss EquiFund, the ERDF fund of funds that is implementing equity financial instruments to provide access to finance for SMEs in Greece. Mr. Tsakiris, welcome.
Thank you very much for the invitation.
So, EquiFund has been launched in 2018. What sort of impact has it had in Greece so far?
Indeed, the first investment by an EquiFund-supported fund was recorded back in March 2018. Now, after, 2 years and some months, the investment activity continues very strong, reaching 123 million euros with a total portfolio of around 100 companies invested. And we are expecting to see more investments in the next 2 years to come when, the investment periods of the funds are ending. To this end, we have witnessed the effort of the initiative in reversing the problem of brain drain, and this was very important for Greece due to the 10 years crisis that we have. So it was not only employment opportunities that have been created, but there was plenty of cases of Greek founders from abroad that by using EquiFund resources, they came back to Greece, built and grow their teams considerably. Another thing was that the EquiFund managers have achieved 3 major exits only in 2020, in which 3 companies have been successfully sold, larger businesses, on terms which secure, additional investments in the company and retain the base of the business and the associated jobs in Greece, something which is also very important for us. Those exits have resulted in returns as well to the investors, including the Greek state. It's very important to see global leaders acquiring Greek companies and retaining their personnel in Greece. For example, in May 2020, there was the exit of Think Silicon, which in Greece was marked as the biggest deep tech startup exit ever happened. In August 2020, we had a $360 million transaction of InstaShop, that it was a delivery company that was sold to an international player.
It is really interesting to hear the success of the financial instruments so far. Getting into some details, I know you have structured the funds into 3 investment windows. What was the reason for this?
The initiative focuses on several aspects of entrepreneurship. And I would say we are proud of its unique breadth. It addressing financing needs of companies at all stages of their life cycle, starting from the innovation window, which I would say supporting companies at their birth with seed financing and very early stage financing. Then we are moving into the early stage window for companies that they have produced some results and we are expecting them to grow significantly. And then it moves to the growth window, which is the third window of EquiFund, for SMEs and largest companies that have the potential to, to grow internationally, extrovert, and so on and so forth. And we can expect quite significant growth from them. In this form, the aspect of addressing market needs and achieving our policy objectives is met. Also, please note that there is the side of the fund managers and the investors on top of the Greek state and the European Investment Fund. Different fund managers with different expertise were selected for each window, and different investors with different risk profiles were attracted for each window. So I would say it's a full puzzle that it comes up as a complete picture of supporting equity investments in Greece.
So, for our listener, more information on the design of EquiFund can be found in the FICOMPAS case studies, which is available on the FICOMPAS website. And now for the next question. As well as successfully mobilizing finance for SMEs, EquiFund has had a wider impact on the venture capital and private equity sector in Greece. How important is this to the long-term competitiveness of the country?
If you see, Greece some years ago was not in the map of venture capital and private equity. Now it's well established, I would say. And actually, on the basis of the 2019 activity, we have moved forwards towards the EU average, but still it's a long way. And I believe that it will be achieved soon because we are planning additional equity initiatives in Greece. So this definitely is supporting the long-term competitiveness of the country. Also, there's other aspects to take into consideration. That, for example, more than 150 private investors have been attracted to the EquiFund, committing almost 160 million euros. The majority of those are Greek investors, but we're also having foreign investors, institutional investors, non-institutional investors. And as soon as they are, let's say, used to this ecosystem, they will continue to invest. And also the vote of confidence is very important for additional investors to come. And also, let's not forget that there have been cases of supported companies that they have secured further financing rounds after the initial EquiFund support from very important international venture capital funds. Also, another, let's say, benefit of all this effort is that a lot of investments were stemming from academic or research institutions. For example, the University of Thessaloniki, the University of Ioannina in Thessaly, Fourth Institute in Crete, the Demokritos Institute in Athens, and so on and so forth, where EquiFund really gave an exit to a lot of ideas, an exit from the universities and research institutions with the appropriate financing. And also, this initiative has provided inspiration to the local market. We have already experienced the broadening and the strengthening of the pipeline. A few years ago, there was nothing in the significant pipelines of the fund. I would say, just to complete your question, that the legacy of EquiFund will not be just successful companies, but the development of a new cohort of professional fund managers that were inexistent in Greece before. Also, the ecosystem, meaning consultants, legal advisors with expertise in venture capital and private equity transactions. It is and will be even more well established. So it's an overall, I would say, significant benefit.
This year has been dominated by the COVID-19 outbreak. This has had a large social and economic impact in member states. How have portfolio companies of EquiFund venture capital investment responded to the challenge?
2020 was indeed a year of great challenge, but as it happens for successful, let's say, managers, for some cases, it was a year of opportunities. The impact of the crisis on the EquiFund portfolio, I would say, was diverse. Some companies completely, their business plans were derailed, while for others, I believe they have excelled and they are thriving. Several EquiFund companies have responded positively to meet needs with these new conditions, let's say, in the healthcare and related sectors, or to give back to the community in different ways. The fund managers, on the other hand, were there to support the company's efforts so that to ensure financial viability and exit from the crisis as unscratched as possible.
Well, given the success of EquiFund, what would be your recommendation, your suggestion to other member states and managing authorities in the European Union?
My recommendations would be, first of all, to plan ahead, to engage definitely relevant expertise, and to design the instrument with the actual market in mind, not in theory, but in practice. The equity instruments, by nature, are taking a lot of time to be implemented, and this has to be taken into account in the designing. The relevant call for expression of interest for the selection of the fund managers is something also very important that has to be taken into account. In the case of EquiFund, I think we have achieved everything in record time, but still the time that it elapsed between the publication of the call of expression of interest and the first investment was almost 2 years. So time is of essence. When it comes to the expertise that I mentioned before, there was already an expertise in Greece from the previous programming periods, as we have done financial instruments through Jeremy and Jessica. But this was not enough. To complement the experience we had here in the Ministry of Development, we opted for the service of the European Investment Fund, which actually is the fund manager of EquiFund, where they did the whole, I would say, job designing the call of expression of interest, selecting the fund managers, and currently monitoring their performance. All in all, the contribution of the European Investment Fund, let's say, was critical to the success of this initiative. Also, I would like to add a final word about the link to the market. This is an initiative that addressed a clear and identifiable market gap in equity financing in Greece, and it was designed to promote the venture capital and private equity ecosystem as a whole, regardless of stages, sectors, and regions. So it was, given the big market gap, we had a holistic approach to the problem. When it comes to the call of expression of interest, it was itself, I would say, characterized by flexibility in providing options to the applicants, always within the framework of EU regulations. Also there, the help of EIF was very critical. The overall investment strategy of the initiative is fully in line with the Greek policy objectives, and this is also applying for the projects that they were financed, which are assessed and selected retained fund managers.
Thank you, Mr. Tsakiris, for your time today. I'm sure that this interview will be very useful for the managing authorities in all member states.
I also thank you very much for the invitation.
Stay tuned for the next episode of the FICOMPAS Jam Sessions. If you have any questions or you want to suggest a new podcast topic, send us an email at info@ficompas.eu.